Today's episode of Market Talk is brought to you by Growmark FS. Keeping up on the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And joining us now here on the program as we recap the December WASDE report, which was rather uneventful, not to be surprised with that. It typically is. And also the week of the market trade. We're at the USDA convention in Nashville. She's at her office in Minnesota. Kristi with Van Ahn Company joining us. Kristi, great to have you back on Market Talk. Hope you're doing well.
I am. It's always a pleasure. Hope you are too.
I'm doing good. Always a good day to be out of the office, so to speak, and take it in a convention and a trade show here. Let's talk markets. You know, I was out of the office, but it was on a report day, which typically is unheard of. But the December WASDE report wasn't much to speak of. I know there was a few changes, but overall, kind of the 1,000-foot view, Kristi. I mean, it just kind of came and went, and with a whimper, basically. There just wasn't much to this December report.
Yeah, if you're going to miss a WASDE report, December is probably that report to be able to skip by it and not miss out on too much. And USDA kept right with it. So there was absolutely no changes domestically for wheat or soybeans. They did not change any numbers. Thought maybe with crush margin as strong as it is, you could see that happen in soybeans, or the fact that, you know, we've seen plenty of sales here lately for soybeans. We've been keeping up on pace. The only change you really did see domestically when you look at the key three was corn, and that was exports being dropped down 75 million bushel. And honestly, that is not a surprise whatsoever. We have been really lacking any sort of good sales here for the corn market. That's not so untypical, right? Usually you wait until the beginning of the year to really see stuff start to ramp back up. But for the most part, we are lacking that. So it's not surprising to see them come down and adjust that. I'm going to be real honest, though. I really was in the camp that I thought you would see any adjustment to corn exports kind of be washed out with feed use increase. And we did not see that this time. Overall, though, you did not see any major changes. And when USDA acknowledges it and comes in here and says, let's talk about farm average prices, they dropped wheat 10 cents, dropped corn 10 cents, and kept things unchanged. So even though they changed the numbers a little bit, they're not really expecting anything big to change out of this report. Supply side of things, they didn't really change anything either. And that is par, right? They typically come in here and they say, we're not going to make any adjustments because in January they're finalizing some production numbers. So it wasn't surprising that they left that completely alone either. But overall, you really could have looked at these markets and said, hey, there was no crop report today. The market did not change. Usually you see some sort of fluctuation and some sort of jump right before the report happens / right after the report happens, like 30 seconds before, 30 seconds after. And you didn't even really see that today. And I'm going to go ahead and say that might be due to the fact that people squared up positions prior to this report. We've seen some movement come prior to this report. Would not surprise me if that was their adjustment period. And now that we're, December 9th, you could be saying they might just adjust this and kind of walk away from the market for a little bit for the rest of the year if nothing big happens. Now, next week, we do have, inflation numbers. We have the chance at an interest rate. So I think they're still going to be active in this market. But overall, it has been very quiet to finish the week off.
Definitely very quiet to finish the week off. And, thinking about USDA cutting export demand, I agree with you. Okay, yep, that's fair. We need to see that. Exports have been sluggish. But still, looking at the balance sheet at the end of the day, when it's all said and done, we're still pretty snug, Kristi. And I think that's something we need to, keep in the back of our minds as we head to that January report, is that things are still looking fairly tight.
Yeah, we don't have a whole lot of wiggle room, especially when you look at kind of soybeans with crush margins as strong as they are, with exports being strong. We do know that there's a possibility of a big crop coming from South America for soybeans. The big question is what's to come for the corn market. So Brazil's had some decent rains for the most part, but it's Argentina that all eyes are on and saying, hey, look how dry they are. Look what happened in the years prior We know that when they're dry, it does cause some big movements in meal. We're seeing that right now. Meal has been on a rocket out of here. A lot of that has to do with the fact that Argentina, majority of their product shipped is a byproduct. It is not the actual soybean. And so you're seeing that attention there. But the big question is, we've seen that Brazil has had an okay growing season. We know that there's a lot of acres being planted, and China's still pretty active in buying this year's crop for us. And that's just a sign that possibly they're looking at higher demand. They're lifting some COVID restrictions. We know that there's protests and they're taking a little bit of an easier stance on it right now. And it'll be curious to see moving forward, how active they want to be. Do these continue to ship out? We have been shipping our beans extremely fast. And that's the one positive to seeing inspections every Monday, that they have been so poor on wheat. They have been so poor on corn, but they have been monster every time for soybeans. And that's a good sign that we're getting these beans out the door and keeping up with them, because eventually you do have corn's turn, but we don't want to see where we're having dismal export inspections for all three and you're just not getting it out. We are getting those soybeans out the door.
Well, you mentioned South America, and that was one of the areas in the WASDE report that I was surprised with. USDA did not make any change to Brazil corn and soybean production estimates. They did bring down Argentina wheat estimates, but corn and beans, they left it alone. And I think USDA basically said, hey, we want another couple of weeks to decide and see what is happening with the weather, especially in Argentina, despite some of the different private estimates and reports are that, we're seeing the crop already lowered from some of those estimates and reports. So I think as we look ahead here, which is typical for this time of year, but I'm with you. We're going to be watching the South American weather really closely and how that affects the demand to China, et cetera, Kristi.
Yeah, and USDA really just decided to say, hey, you know what, we're not going to do a whole lot in this report, and they treated that the same domestically for numbers and South America numbers. And so I would imagine you might be waiting a little bit. There's a lot of private estimates that jump the gun, and then you see them kind of work their way back throughout the spring to kind of fine tune a number. USDA has been very slow to adjust South American numbers up or down in the beginning of the year until they can kind of fine tune that. And so that's what we saw today. They left it the exact same, and there is a lot of growing season left. And you have to think about, such a big part of Brazil's corn production isn't even planted yet. It's got to come on the heels of a soybean harvest. So USDA has been slow to it. I think you can justify it being slow. And honestly, I think that the market is kind of shrugging it off and not even really believing USDA's numbers right now for South America and just saying, hey, eventually they get up to par. Let's let them be for now, and let's focus on where private estimates are, specifically private estimates out of the South American region.
Looking a little more on the soy complex here for this past week, you mentioned the meal market's just been on a rocket ship. It is 4 straight days contract highs there. Soybeans have been going along with it. We've kind of been bumping up against some overhead resistance here, but as you look at this soy complex, I know bean oil is a different story with the liquidation there and the EPA news, et cetera, but looking at meal and beans themselves, I wonder what it could take to maybe get us through some of this overhead resistance, but still a very robust looking market here to wrap up the week, Kristi.
Yeah, we're really towards that top end of the range when you look at soybeans. And I do think it's going to take a little bit of a story because, you look at earlier this week, we had a very large private sale to an unknown destination for soybeans. Typically that is China. And so that did not even shake the market. And so I think you've built enough weather premium, uncertainty, kind of the fact that we know demand is strong between exports and crush. So we've built that in, and it's kind of like the market is taking a pause and saying, hey, give me some more. I'm not going to be able to get above these key resistance levels. And when you look at those resistance levels, you're looking at anywhere from that 1490 to 1510 on this year's crop, your January or March contracts, and $14 for NOV 23 soybeans has been a line in the sand that this market just can't really cross it. So we saw highs above $14 yesterday, but for the most part, they don't sustain themselves there. And that is a level that's proven on the chart that it's just going to take some information to get above that chart. And so we are being active at this $14 for NOV 23. We have been active here on the crop that's in the bin for your soybeans, just because this is a really, really big level when you look at it overall in the broad picture of it. And we know that South America, specifically Brazil, has a decent enough start to be able to perform and have an okay crop.
Very, very true. And I think as well, looking overall at the week and how we round out, one other thought, wheat, a little bit of liquidation there, but I didn't really see anything to point to why wheat was under some pressure on Friday, Kristi.
Because wheat's miserable. I don't know what to tell you. Like wheat, no, I'm kidding. But, wheat's been a dog. Like it can't get going. You have the fundamentals behind it. You look at, worldwide, you look at domestically where we are for carryout levels on wheat. There's still so much uncertainty here when you look at it for, when you look at that relationship between Russia and Ukraine and the UN and shipments. I mean, you look at all these situations, we've had a big pullback in the US dollar. You should be able to see that demand starting to come through, and wheat can't do anything with itself right now. And you're looking at levels that we were at pre any sort of indication that Russia was going to, invade Ukraine. And you're looking at it and you're saying, when is this market really going to turn around? Now, 2 days ago, beautiful candle on the chart, really thought, hey, this might be wheat's movement. You might be starting to see this market turn around, and it could not do anything with it. And it couldn't find a reason to bring the buyers in. And I think that's a big reason why the corn market is struggling as well. Wheat's just been pulling on it, and it's been that dog that it can't get going. I do eventually think that wheat's going to have its moment. But for now, until it kind of proves itself and you have a couple days turning that bottom, this market's path to least resistance seems to be a little bit on the lower side.
Kristi Van Ahn-Kjeseth, Van Ahn & Company, is our guest analyst here today on the show. Kristi, I want to bring this all kind of back home, talk risk management a little bit here as we've looked at the WASDE, we've looked at the week in the markets. So thinking about first up this year's crop before we talk 23, I mean, what are your thoughts? I know basis is still looking fairly strong in some areas. It has come down, but I mean, what are your thoughts? Has anything changed, I should say, since the last time you and I talked when it comes to marketing thoughts towards the end of the year here when it comes to corn and soybeans on this 22 crop right now?
Yeah, we're still sellers of soybeans here. The basis level is well off of where it's been, especially look southern Minnesota. You look at your ADM, your CHSs, they've came off of their bid quite a bit. Your end processors in South Dakota have came off as well. You were 45 under, and now you're looking at maybe closer to 10 to 25 over. Still a very strong basis level for those processors. When you think of the grand scheme of things, you look at where you have your local elevators, that basis level is still strong. And you look at where the market is and you're looking $14.50 to $14.75 cash, that's a good price. And so we are still being active sellers when you look at that. And there's plenty of ways to look at looking at a call spread. May call spreads right now are actually very reasonable to look at if you really think that this market has more to come. But we've proven that we can get some bullish information into the soybeans, and it's still limited and it's still struggling to go. Now, if you can turn the sentiment around and have wheat and corn be friendly, I think that's a different situation but with soybeans. But right now, soybeans are struggling to really go on their own. And so we're looking at sales there. When you look at the corn market, we're kind of stuck in a rut here and saying, okay, we filled the gap at 638 for corn on the March chart. We're trying to find support levels there. Let's look at being prepared to sell into a position. And so really, if we can get back up to that $6.80 to $7 mark, that is where we're targeting to make some more sales for the corn market. That doesn't mean that we are not going to sell if we can't get there, right? You have those risk parameters in there and watching it. But right now, I do think, like you had stated earlier, the balance sheet is still tight for corn. I do think that corn will have its moment just like wheat. And so we're being patient when you look at that. Same situation for the wheat market. And basis levels for corn around our parts are really strong on the front end. And so we're being a little bit patient here, and we think that continues to be there. But I do wonder, you look at kind of these years prior, there's been a lot of demand for corn and a strong basis, Jan, Feb, March. And hopefully we see that again with a little bit of uptick in futures prices as well.
I want to have a few minutes for livestock, but real quick, 23 crop as we near the end of the year. If guys and gals are locking in inputs and they can lock in a little bit of a floor maybe and take some risk off the table, anything changed with looking at 23 and some of the marketing there, Kristi?
Yeah, we've been 10% marketed for 23 corn for quite some time. So if you're not there, I'm not chomping at the bit to get there right now, to be honest. We are 20% when you look at Nov 23 soybeans, and I'm a seller here. There's positions in the account, there's sales that you can be doing at the elevator. It is a little bit tricky when you're looking at, locking in inputs and wanting to get some corn done. When everything shakes out, corn for 23 is still a good price, right? I'm never going to tell somebody, don't be looking at this situation. Don't be coming in here and saying, hey, just shy of $6 isn't a good price. It's a very good price. We're just a little bit on the friendly side that we could see some better prices to come. And we're still targeting that 641 level for D's 23 corn to be able to go after it. Wheat is not on our radar right now, and we're going to give it some time and hopefully see a little bit of rebound before we do anything for 23 there.
Hopefully that is the case. And let's talk livestock real quick. A decent day in cattle on Friday. Hogs were kind of mixed as we wrap the week in the protein sector. Anything standing out to you? Anything you're watching closely there, Kristi?
I think this last week or 2 weeks in hogs, and then kind of seeing how we traded a couple days here in livestock, should just be a little bit of a reminder that these markets, when they do want to move, they're going to move, right? There's no quietness, there's nothing to see. And so I would say it's very important to be looking at putting a floor underneath your cattle and hog marketing. And to be able to say that, I would say try and keep it open, because when you look at the picture of demand, when you look at kind of the numbers, cattle have a really friendly story behind them. Cash trade seems to be supportive of it, but we also know that there's a lot of influences on an outside perspective that we can't handle. And it seems like the market is thin enough that when something comes out or somebody wants to be a seller, you're down so hard in 2 days that you're kind of like, okay, what's the point now? So I would say that's the best advice I could give, is just making sure that if you know you're profitable at these levels, doing some sort of risk management. But I do like to have that top side open. Hog markets have been all over the place. If you can get up to those recent highs, that's where we're looking at doing marketing.
Fantastic. Kristi, before we let you go, any final thoughts for us real quick?
I think that's it. I think we covered a lot of information in a short amount of time.
We definitely did. If folks want to reach out to you and get a little advice with their marketing, what's the best way to get a hold of you?
You can call us at 1-800-648-5494.
And you can also find them online, vanonco.com. With that, Kristi Van Ahn-Kjeseth, Van Ahn & Company, thanks for joining us today on Market Talk, and have a great weekend. We'll talk to you again soon.
Perfect. Thank you.
That's going to do it for Market Talk today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great weekend.